Hey traders, it's Ace Trading again. So someone asked me how to replicate some of my scans in Finviz. So this is sometimes a common problem. Some folks don't have access to TC2000. It's, from my understanding, it's not available in some countries for some reason, or maybe folks can't afford it, or maybe they can't afford uh, the gold package or the platinum package. So I just wanted to do a quick video on how you can potentially replicate some of the things that I have shown in TC2000, but doing it in something like Finviz. Other folks use TradingView, I think. I'm not super familiar with that application, to be honest, but I have used Finviz a few times, so that's what I'm going to demonstrate today. So when we talk about the market monitor dashboard that I've built, I showed you some of the basic parameters that I have. So I have essentially what's small cap and above. So this is 50 million capitalization and above. I think that's small cap. And then the price is hitting a new 5-period high within the last 2 bars. And then, obviously I have that for the new highs, new lows. And then I have what I call up momentum and down momentum. I don't think this second column, 2 columns here, are going to be quite possible, and I'll tell you why in a minute. But this is small cap and above. This is large cap, mid cap, small cap only. So if you go to Finviz, and this is just a blank Finviz screen. If you go to the screener here, finviz.com, go to the screener, and all of this is blank. So then the question is, how would you, in whatever way, replicate what I just showed as far as my market monitor? The simple answer is you can't replicate it exactly like I have shown. With these generic sort of filters, you can do some things, but you can't do it exactly the way that I just showed. So one thing you can start with is if you go here and you just make sure that all of the filtering criteria are visible. If you go to market cap, you can see there's a variety of different market cap parameters here. Also, I guess micro cap is 50 million, so I guess my scan is micro cap and above. But you can see depending on what you want to do. Let's say, for example's sake, we just go micro cap and above. So micro plus is going to be anything that's above the microcap level. And if you look through the options here, there isn't really there's no way to describe something that's hitting a new high or a new low the way that I've described in TC2000. But they have a 20-day high low and a 50-day high low and a 52-week high low. And there's an all-time high low. So one thing you could do is if you put this on here, this will show all stocks hitting a new high on the day of the scan, or a new low on the day of the scan. So those are perfectly fine options. So that would give you basically within the last month, I'm sorry, hitting a 1-month high on the day of the scan, or a 50-day or a 52-week or an all-time. Another way you could do it is you can put it some percentage below the high. So while this might not get things that are on the, it'll get things that are coming through on the day of the scan, but it'll also get things that are within a 20-day new high, or a 50-day new high, or a 52-week new high, etc. So this is another good option. You can scan for things that are between 0 and 5%, 0 to 10%. So essentially, if you had this thing selected, and right now 3149 is the number of stocks coming through. So these are all stocks that are microcap and above that are within 10% of a 20-day new high. And then if you switch that to a new low like that, you can see it's 3029. So that's a perfectly fine way to do it. You could do it a strict why is this not letting me click now? All right, so there we go. Technical glitch. So if you do it within 0 to 10%, then you have this 3,000 something number. If you do it an actual new high, it's 788. If you do it an actual new low, it's 316. So if you do it to where it's a new high or new low on that day, you're going to get a number that's significantly smaller than if you do it something that's within that period. And there's some pros and cons. The cons would be if you make it to where it's only hitting a new high or new low on that same day, then it's going to miss things that hit a new high yesterday or the day before and maybe pull it back slightly. So that's what these sort of scans would catch. But the cons with these scans is something could be within 5 or 10% below a new high and have been in a multi-week base or a multi-month base. Because something like Walmart, it might move 10% the entire year. So that's kind of the con of using something like this, because it'll sometimes catch some things that have been basing for a long time, which those are not things that are currently like hitting new highs and having momentum. So you just have to kind of weigh the pros and the cons. So this would be a way to take Finviz, use some cap filters, use some simple new high, new low, or within a new high or new low, and you can, for all intents and purposes, you can replicate what I'm doing here with this side of my screen. And I suppose you could do something similar with there's a way to so the performance you can scan, and this may be similar to how Stockbee might do something where he's looking for things that are up a certain percentage within a week or a quarter. So you could have a scan where you're comparing things that are up, let's say 20% in a month versus things that are down 20% in a month. That could be another way to measure performance. So rather than like my scan shows the ADR up or down, because this one is up 2 ADR versus down 2 ADR, that's essentially what that scan is showing. You could do something similar here where you could just use a performance based, where you can use it based on a week, comparing a week up versus a week down. And this is a slippery slope. I mean, there's a lot of values you could use here. I would recommend, if you're doing this, maybe you could use a monthly time frame where things that are up 10% in a month versus down 10% in a month, or 20% in a quarter, 30 versus 30% in a quarter down. There's different ways you could do it. The key here is not specifically the numbers. It's making sure you understand the changes in those numbers over time. So it's honestly, it's not really about the specific number that's chosen. It's about you logging these things regularly and monitoring the changes, because the whole point of these is to show changes in the breadth and changes in the momentum. So you can see whenever that number expands, let's say let's say the monthly performance to the upside numbers, maybe those expanded while the negative monthly downside numbers contracted. As long as that trend continues, it's showing a positive increase in stocks that are moving higher, decently, and a decrease in stocks that are moving lower decently. So that's just a simple way to kind of use either performance or new highs or new lows. And you can essentially build your own sort of momentum and breadth filters and kind of trackers, similar to the way Stockbee does it, similar to the way I do it. Mark Boucher talks about this sort of aspect as well. That's actually where I learned about how to use breadth and momentum, kind of monitoring the ebb and the flow of the breadth and the momentum. I initially learned from Mark Boucher. And then I saw Stockbee. He has something that's different from what Boucher did. It's his own kind of take on that. So I've just taken bits and pieces of things that I've learned from traders over the years. I didn't necessarily agree with some of the parameters or things that were being used in some of these different models, so I just kind of made my own that made sense to me, that resonated with me. That doesn't make it right or wrong. It's just a different view, a different perspective on how to do this. But ultimately, the whole point of doing this is to monitor over time the ebb and flow of those numbers, because they're telling a story about the strength or the underlying weakness that's within the market. Another thing you could do to kind of further filter let's say you're looking at microcap plus new highs. There's another one here for sector. So there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So there's 11 sectors. These are similar to the ones that are in TC2000. Looking at the names, it looks basically the same. You know, some charting services and things like this, they have different numbers of sectors, or they cluster and group stocks in slightly different ways. So sometimes you'll have 12 or 13, or, you know, some different number of sectors, or the name of the sector will be slightly different. But so like if you wanted to know how many microcap tech stocks are hitting new highs, you know, you just select that, and then there's 174. You know, how many of those are hitting new lows? You know, you can hit 29. And again, it's kind of like, it's the same concept I'm using. So like just by looking at those numbers, there's 174 stocks hitting a new high versus 29 hitting a new low. That's a significant number to the upside. If that number was flipped and you had, you know, a bunch of new lows and only a small number of new highs, then you can be reasonably confident that, you know, you're probably in some sort of downtrend or kind of sloppy market. So, yeah, I mean, this is not as like, this to me is a lot more user friendly and clean, because I can just look at this one dashboard and I don't have to sit there and go, you know, sector by sector, stock by stock in many cases. Whereas with this, you know, you're having to flip between new highs and new lows, or flip between different sectors, or flip between different caps. But it's free, so you get what you pay for. Can't complain too loudly about that. Okay, so that's the market monitor aspect of this. So if I reset that, the other thing is, you know, can you replicate, you know, something like these ADX filters, where I have AD Express and AD Extender. You know, I've got new price highs in there. You know, there's ADX criteria, there's relative strength criteria, liquidity, ADR, all that sort of stuff, right? So based on what's available, you can reasonably, and you can kind of do the same thing. Like if you wanted to put a basic just liquidity filter in there, just you know, put it on you know, microcap plus. So anything with 50 million capitalization and above, you know, those things are going to come through. Anything below that's going to get weeded out. So, you know, you have you know, almost 5,000 stocks, whereas with no filter, there's, you know, 9,500. So it basically cuts the number in half to some degree. All right, so micro and above. And then, you know, we can look for, is there any sort of volatility filter? You know, so there is a volatility filter. This goes week, month, and then if you have elite, you can get something higher than that. But, you know, I would say a reasonable bottom threshold would be, you know, like if you put it on 2%, that'll kick anything out that's below 2%. That's probably a good starting point. But, you know, 2 or 3% as your bottom threshold is another good way to filter things down. You can see it cut that number almost in half again. There's also a beta value here, and if you, that's another good thing about Finviz, is if you cursor over these, it actually tells you what the criteria is. So beta is another way that you can is another way that you can kind of filter things out. So usually anything that's got a beta over 1, I want to say it's 1, beta instead of 0. Yeah, I mean, this description does not correlate with what my understanding of beta is. Typically, if a beta is over 1, that means it's outperforming the market index. This describes it a little differently, so I'm not exactly sure how this is calculating it. Okay, so you have volatility, you have certain parameters of liquidity. You can put some trend sort of parameters in there. I use the ADX to kind of filter out for trend, but I mean, you can do something simple like, you know, let's say the 20-day is above the 50-day. And again, now you're down to 1,000. So that just filtered out anything that doesn't have a 20-day above the 50-day. If you want to do that even further and kind of like filter out things that aren't in a long-term uptrend, you can do, you know, 50 over the 200 perhaps. Again, you can see with each added filter, the number just keeps getting whittled down and whittled down. And you know, this would be similar to like Minervini's trend template. I know this isn't exactly it, but again, we're sitting here trying to build something from you know, what we have. And then, you know, one of the other ADX filters is that the stock has hit a recent 20-day high. So that's another thing you could do is you could make sure that the stock is within some vicinity of its 20-day high. You know, maybe use, you know, 0 to 10 or 0 to 5. And then, you know, that's a good way to make sure that the stock is at least near a 20-day high. And you can even do it for both of these where it's, you know, it's within a 20 and a 50-day high. If you're into 52-week highs and stuff like that, I mean, knock yourself out. That's not really something I necessarily look for, but it's certainly something you could do. So you can see there's 354 stocks that are left over after applying just a couple of basic filters here for, like I said, liquidity, trend, you know, relative strength, so to speak, because it's you know, it's sitting within a certain amount of its if it's 20 and 50-day highs. You can also have it to where it's a certain amount off the lows. You know, Nicholas Darvis talked about this aspect in his book, where he was looking for stocks that had doubled off the lows. You know, doubling is, you know, that's a bit aggressive off the lows, but you know, if you're looking for something that has moved some distance off the lows and it's not, you know, just kind of lagging behind, you know, you could put somewhere between 30 and 50% off the lows. That's probably a pretty good starting point to get stocks that have, you know, some sort of momentum off the lows. They're still sitting near recent highs. You know, they got the 20 above the 50. They have some amount of volatility, some amount of liquidity. And if you want some average volume filter, you know, you want things that have a certain amount of daily volume. That's another thing you can. Let's say 300K is a pretty good number. So you know, now you're down to 180 stocks. So remember, we started out with, you know, 4,000 or so, 5,000 stocks. And this is, you know, this is helpful. You can sort this by sector. You can get an idea of which groups are kind of leading this sort of thing. You can look at the caps, the PEs. I think there may be other ways to kind of modify these columns. I'm not sure. I'm not really a user of Finviz. I'm just I'm just off the cuff, like walking through this just based on my own limited understanding. If float is something you follow, you can add, you know, make it under 100 million float. You know, that knocks it down even more. Studies have shown that stocks with smaller floats tend to move, you know, higher and quicker over time. You know, and if fundamentals are something important to you, you can, you know, maybe you can add something else around here. You could look through all these different criteria and see if anything's helpful. So, you know, that kind of leaves one to, you know, you would have to go through each of these stocks, kind of evaluate the setup, evaluate, is it meeting other criteria that you find important. I think there, yeah, you can look at the charts here. So that list that we just saw, you know, you can use this to quickly go through. I don't know why it draws this stuff on here. That does not seem helpful to me, but you know, I could quickly see, you know, EAT might be having a nice little flag pattern there. You know, maybe HLLY is building a higher lows sort of base. So I mean, there's some indications. You can look at the chart here and kind of see what's going on. So that's one way to do it. You could go through this and build an anticipation list. And look for things that might break out in the next day or two. That's certainly one way to do it. Another thing you could do, which is, it's kind of my preference, is I would just look for stocks that are up on the day for, you know, a few, you know, at least 1 or 2%. You know, let's just say 1%, or you can just say it's up at all. But you know, like Stockby talks about his breakout strategy. I think the studies he refers to says, you know, stocks that are up 4% or more, they tend to make momentum burst kind of moves. So maybe you can set the threshold a little bit smaller than that, so that way, like, you know, you can catch things that are maybe up a little bit, but not quite that 4% threshold. And then you can also, what else do we have here? Oh, relative volume. Okay, so this would be another good one. So in addition, so you can basically say, I want the stock to be up at least 2% for the day, and I want the relative volume to be over 1.5, which means it's tracking at 50% higher than normal. And you can see, like for this particular day, there's only 5 stocks that came through. So that's kind of the way that I prefer to do it, is to have some sort of what I call a trigger criteria that's telling me that it's breaking out today. That way I'm not sitting there having to filter through 50 or 100 stocks. Most of the time you're only going to bring in 10 or 15 at the most. But then if you evaluate the pattern, you can kind of see most things are not going to kind of meet the metal as far as like what something that would be traded on that particular day. So even if these stocks came through the list that I was scanning and looking at today, just evaluating, okay, maybe Rev G, I might have bought that. I can't really zoom into this thing anymore, but that doesn't have the right look. Maybe a few days prior it had the right look. This is already extended, so a pass. This looks like it's freshly breaking out of a flag pattern, so maybe Weave would have been another one that might have been a potential buy for that day. And then SURG, it looks like the proper breakout was, several days prior and not on that day, right? I guess it was Friday. So anyway, you can make an anticipation style list where you basically have a watch list, or you can have a trigger sort of list. Again, pros and cons. The con to the trigger method on this site is, I think, 15 minute delay. So that's kind of an inhibitor to where you're not going to get the most current data. So like whatever you're seeing here, it's going to be 15 minutes delayed. Whereas, if you have an anticipation list and you can maybe stick that in some sort of watch list on your trading application, you might have real-time quotes that you can rely on. So again, this is a free method to just kind of replicate some of the things that I've talked about in TC2000. It's not exactly what I do. It's definitely different, as you can see, but it's free. It's available. Honestly, I've used this sort of method in a pinch because, to be honest, the TC2000 app on the phone is horrible. It's like one of the worst apps that I can recall ever using. To be honest, it's horrible. As good as their desktop app is, their phone app is just atrocious. So I've actually had a Finviz scanner on my phone saved as basically like a web page on my phone. That way I could just sit there and I can run this scan throughout the day and just see what was breaking out. So just wanted to do a quick video and just kind of show you some strategies and techniques to be able to use Finviz to replicate some of the things that I do in TC2000. Hope you enjoyed it.